Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. All right, let's go ahead and start with the markets. So SPY ended up with a very bearish candlestick. So if you take a look on the weekly time frame, we have what we call an inverted hammer candlestick that tends to form at major areas or levels of resistance. And this specific candlestick indicates a reversal. And in this current situation, we are seeing a reversal to the downside. And if you continue this reversal, since this specific weekly candlestick is indicating that we will continue to see more downside, we can potentially hit the previous lows that were made on October. And remember, we bottomed out in the middle of October, which is the reason why we continue to move up higher for most of November here, right? And now that we are in December, okay, we need to look out for a lot of volatility because we tend to get a lot of people getting out and getting into new positions at the end of the year. This is what we call portfolio repositioning. And a lot of institutions do this as well, a lot of hedge funds. So if you guys don't want to look at the markets for the last 2 weeks here of this year, you don't need to at all. You just need to observe and watch where the markets are going, but you do not need to trade every single day of this week. Now, on the monthly time frame here, all right, so far we have higher lows since October, right? And that is a fact. And we've also made higher highs, which is another fact. And the only problem with this monthly time frame is that we have rejected yet again at this descending level of resistance, which extends from the broader descending channel or this macro bull flag that we've been making for this entire year. And the flagpole comes from the entire move that we saw from March 2020 lows until the highs that we made in the start of this year, right? So on the daily time frame, okay, so if we go back on the daily time frame with all that information, what should we expect for this week? Well, first of all, I think on Friday, we had an overextension, an overreaction to OPEX. And the reason for that is that, well, there was no big reason or big catalyst to have a large gap down between Thursday and Friday, because it would have been great if we ended up opening around that 389 to 390 support area that I've been telling you guys for weeks now at this point. And instead, we decided to gap down at open and we continued to push lower. And that makes sense, obviously, because sellers saw this opportunity after this gap down open to continue to move lower, and specifically the daily 50 SMA. And if you guys remember, the daily 50 SMA is a huge level of support. It's a support SMA or resistance SMA depending on where the price is at. But on Thursday, okay, we're still above the 50 SMA. So for the fact that we have pushed lower, okay, after retesting the 50 SMA for the first time on Friday and then closing below it on the same day, tells me or indicates that we have an overreaction to OPEX. So obviously we had a huge rundown already since CPI, since we've had this double top price action at 410. And so, coupled with all these catalysts like the FOMC meeting results, the Jerome Powell conference, and the CPI data that came in, and all the other economic data that we got last week, leads me to believe that yes, we do have an overreaction, and we should be able to see at least a retest of the 50 SMA, if not the retest of that 389 to 390 area that I've been talking about for you guys for multiple weeks. So this week, I'm expecting an intermittent bounce. It will also make sense since we've had back-to-back 4 candlesticks on the red here. So even though we're not really oversold on the RSI, I would expect to see a small intermittent bounce, which is the reason why we were looking at those Apple calls last week on Friday. And if you guys didn't get an Apple calls, that is fine. It was a very, very risky move. And that also leads me to a good segue here to our first name here, Zoom. Okay, so Zoom here is actually looking like a very good short. So I want to give you guys a broader look at Zoom here. We've fallen from the highs of $588.84. So that was the all-time high on Zoom. And this is what we call a very impulsive move up higher, where the price doesn't make any sense, right? Compared to the fundamentals. So this is where Zoom has ultimately, well, in itself, a bubble has popped within itself, right? And Zoom has come back down and hit the IPO price ranges. And we have yet to come back down to the all-time lows of $60.97, or at least the low of the IPO range that we got in these two candlesticks, right? So what am I saying here for Zoom? Well, this week, all right, I'm expecting a continuation to the downside, all right? And along with the markets, right, if the markets continue to move lower in the next few weeks, especially leading up to the end of this year, I would expect Zoom to move down. However, we have a huge base here, a multi-month base that we've been forming since August between, I would say around 69 to around 87 or around 88. Okay, so if we do get that market bounce, as I've been looking for until, at least we retest 389 to 390 on SPY, I would expect Zoom to also have a bounce around 69.50 to 69, which is a nice area of support that we've been forming and respecting for the past couple of weeks here. So if we do bounce, we can see a long opportunity over 72.50, which is the reason why I give you guys a short entry and a long entry, because there could be a lot of great day trading opportunities this week and into next week. So Zoom here, all we need to do is retest the daily 10 SMA, which is around $72. And if we stay above the 10 SMA, we can see a long-term entry above 72.50 and ultimately see another retest of 76, which is an intraday level of resistance, and possibly even $79, especially if the entire market, if the overall indices decide to bounce for the entirety of this week. All right, so that is our ideal situation to the long side. Now, if we do bounce, for the entirety of this week, we can see another short opportunity brewing for the end of this year and into next year. And that's the reason why I give you guys that short entry to the downside of $69.50. Because if we do break this intraday support and daily support here, we can see a revisit of $66 and $62. And where do these levels come from? Well, it comes back again to the IPO range that we saw and into the all-time lows for this name. Okay, so watch out for this one. We might even get a short entry this week or even a long entry this week. Who knows? All we need to do look out for is what the overall markets will do. Okay. All right, our second name here is Apple. So we got into Apple on Friday. And the reason for that is that, well, again, I was already seeing a potential overreaction to OPEX. As I said on SPY, again, we have overreacted to the 50 SMA here, right? And on OPEX. So with both of those two catalysts in mind, okay, we can see a revisit at least of the daily 50 SMA, which takes us around 385 to 386. And ideally, we can get another further bounce into 389 to 390. So where does that translate us for Apple's price action? Since Apple has a 7% weight on the S&P 500 or SPY. So Apple here, we've reached a critical point of 134. And this is a very, very heavy level of support that we have not broken completely to the downside since, well, the entire year, right? Sure, we may have had a overreaction to the downside after breaking below 134, but guess what? We immediately snapped back above 134 and started this incredible uptrend from the summer rally. So I would expect Apple to, again, respect this level, especially if we do get that intermittent bounce on the overall markets. And if we take a look at the weekly time frame, all right, obviously this looks very, very bearish, okay? And we have also rejected from a critical level of weekly resistance of 150, right? This is a whole number level that we've been looking out for last year and this year as well. So this does not look good for any type of bulls that are left in this name for the next few weeks and into next year. But yet again, I want to make sure that we can catch this intermittent bounce in the overall markets and especially on Apple. So if we're able to keep this, I would say line in the sand level of 134, we should be able to see a revisit of 138 and possibly, ideally, to 140 to 141. But I would say that's a bit of a far stretch for a price target for me this week. But if we do get that ideal bounce in the overall markets, we can see Apple coming back to 140 to 141. But overall, we had to look out for the movement to the downside since we had a nasty inverted hammer candlestick. And this is an even more bearish candlestick compared to SPY, as the body on this hammer candlestick is very, very large. All right. So if we do break below 134 in the next couple of weeks, or even at the end of this week, we can see a revisit of 128 to 128.50, or at least a revisit of the previous pivot low point of 128.65. All right, so our third name here is Okta, all right, OKTA. And this one, I believe I mentioned Okta in this week right before earnings. And I didn't even know this one had earnings because I wasn't checking to see when Okta had earnings. And I said, okay, well, this one looks like a very good name to long. And fortunately, earnings came out really well. And this one had a huge gap, at least I believe 50% gap up or even 60% here from the closing of this specific candlestick. And so we've so far held this gap up. And if you guys remember, great swing names come from names specifically like this one that's able to hold 10 to 15% gap ups, and they continue to move up higher with higher highs and higher lows. And this is clearly showing that specific, conditions for a movement higher. And so on Friday, we have had a controlled move to the downside while the market was uncontrollably selling off to the downside, right? And so this name has retested the 10 SMA, which is my momentum SMA, coupled with the 21 SMA, and we've held above the 10 SMA. Now, here's the thing. The reason why I want you guys to look at this name is that there is a possibility for this name to move sideways. Why? Well, because the 21 SMA has to catch up here, and it's kind of moved far away from the 21 SMA. So if I want the price to move up higher and uphold this potential higher low, because if we have the second higher low held, then we will see that this first higher low to be officiated, right? And if this happens, then the 21 SMA at the minimum should be around 62.50 by the time the price starts to move away from the 10 SMA once more. Okay, so what we need to see is higher highs again. Okay, if we want to see this name continuing its relative strength move, right? And in order for that to happen, we need to break above the high of this specific candlestick of 74.18. All right, so I'm not gonna look for any shorts in this one since we've been seeing a relatively good bullish volume. But if we do see any type of specific trend change on Okta specifically because the weekly candlestick looks like another inverted hammer candlestick, like with every other name that we've been looking at so far in the weekly time frame. We can look for short entries this week that can potentially play into a swing trade into next week, which is the last week of this year. So OKTA, continue to watch out for this name. This has very, very good relative strength. And overall, if it can continue to uphold the earnings gap up, we can see the momentum coming back in. All right, so our fourth name here is DOCU or DOCU. So DocuSign has also proven itself to have upheld its own earnings gap up, right? And we continue to have a huge, almost a short squeeze like price action the past couple of weeks here. And especially last week, we had this huge candlestick on Monday as we broke above the 51 base here, base resistance, excuse me. And after that happened, we continued to move up higher and higher and higher, and we had a pretty controlled pullback after the market sell-off that spanned from Wednesday to Friday. So this kind of caught me off my this kind of caught me by surprise here, as Docu on Friday actually ended up closing at this 56 level of resistance. And this is a previous level of resistance that we just started to use as a new level of support. So for the fact that we have on Friday went below it and then came up to close above it tells me that there is good strength. However, we are again overextended on Docu, and that could be the same case for Okta. However, the technicals here are different for Docu because the 10 SMA has not caught up with the price. Right, we are pretty much still very far away from the 10 SMA. And the top B price action that we got on Wednesday after rejecting from a major level of weekly resistance of 61.50. Okay, so this is the level that you guys can see on the weekly time frame, right? Tells me that there is potential moves to the downside left for this name so that we can get a retest of the 10 SMA. And I can guarantee you guys that we can get a retest of the 10 SMA in the next couple of days, especially this week. So in order for us to capitalize on that potential, I'm looking for a short below 56, which is this really good level of new support. And if we break below 56, then we can possibly see a 100% close of this gap, since we have not officially closed this gap up between this candlestick and this candlestick here. So if we do move to the downside, I want us to see at least a retest of 54 and ultimately a retest of around 52 to 51.20. All right, but that all depends on whether or not the 10 SMA has caught up to the price by then. And ideally, I want the 10 SMA to be around $52 once we get the price to move to the downside and it hits that area of 52 to 51. All right, so our fifth name here is IQ. So this is a Chinese name that has had an incredible run since lows. So if you guys want me to show you guys the percentage here from lows, so 1.65, okay? We have on Friday's closing price moved at least 127% plus. All right, so this is a huge move percentage-wise. And so why am I telling you guys this? Well, so far Chinese names have been showing pretty toppy price action, especially the Chinese leaders. And this one is in itself is not a leader. And that's the reason why I have a long entry. However, because of the fact that we are seeing toppy price action across all the Chinese market leaders, I want us to make sure that you do not get stuck in this name. If we do get a long entry above $4, since we are seeing a nice bullish ascending triangle here, I want us to take quick profits, right? And for the fact that we've been seeing very, very wicky tops on all these candlesticks, right? So for example, this one, this one, this one, and then this one on Friday tells me that we need to be very, very vigilant on any of our long entries on this name. And especially if we do get a nice pop to the upside, we need to take it fast, all right? We need to take quick profits into strength. And our next huge level of resistance that we have here, let me just use this level here, this line, we can see a pop into 4.27 or around 4.30. And if we do get that, we need to take profits fast. All right, so our last name here is Yang, Y-A-N-G. And this is the leveraged 3 times ETF for bear, right? For a bearish ETF for all the Chinese names. And so far, the reason why I'm looking at this name for this week is that, well, again, the Chinese market leaders are showing a very toppy price action. And if I want to capitalize that rather than shorting those specific market leaders, I can long this specific leveraged ETF. And just as a disclaimer, okay, leveraged ETFs are very, very volatile. And you can clearly tell by the price action on this entire name on the daily time frame, right? Even just on the weekly time frame as well, right? We have these very, very huge pop-ups and big, big reactions back to the downside. All right, after that big initial pop to the upside is over. So I want us to see that specific type of reaction this week to the upside, but I'm not looking at the exact same scale that we just saw in the weekly time frame. I just want to see a nice big daily reaction to the upside above $13, especially if we start to see the recently huge gainers on these Chinese names starting to capitulate underneath the selling pressure that they have been experiencing last week. So Yang here, we can see a very, very good break above $13, especially since we had a retest of the 10 SMA on this candlestick, and we closed above the 10 SMA 2 times on Thursday and Friday of last week. So this gives me hope that bulls are starting to see an attractiveness here on this specific name, this leveraged ETF. And if we do get above $13, we can see a sharp impulsive move to the upside and ultimately hitting $14. And ideally, if we do get a larger move to the downside on all the Chinese names, this one can pop up into the gap here that we've made between November 29th and November 30th and potentially hit $15 at least minimum. Okay, and that is an ideal situation. Obviously, that won't happen because the market can give us very not ideal situations, as you guys already known, for this entirety of this year. So that is kind of my thought and ideal that I have in the back of my head. But if that does happen, that'll be very, very good for any type of longs that we can potentially get on this name. And this can also give us a retest of the daily 21 SMA, which has been acting as a level of resistance so far, and we can finally catch up to the 21 SMA. And if you guys remember from our previous videos, also on my YouTube channel as well, so if you guys aren't subscribed, make sure you go back to my channel and subscribe, or just hit the subscribe button down below. Yang here again, since we have close above the 10 SMA, as I've repeated multiple times in previous videos, we can see a retest of the 21 SMA, especially if we do decide to stay within the range between the 10 and the 21 SMA. And you guys should know why that's important if you guys have been keeping up with my previous videos. All right, that is it for this week. Hopefully you guys are able to take very, very quick profits, especially if you guys are day trading, and make sure you guys are especially knowledgeable on your own risk tolerance, because everyone has their own unique tolerance to risk, and no one can ever tell you what risk tolerance you should have. So make sure you guys understand what your risk is and where you're putting your risk, and make sure you guys are doing your due diligence on making sure that you guys know where your entry is, where your stop loss is, and where your profit targets are at. All right, I'll see you guys all next week. Thank you for watching.